just to say welcome to everybody today to the webinar. It's great to welcome Daniel Wilson-Dodd from Charity Bank along today, one of our finance focused sessions. So we're really pleased to have him along. Daniel will give a presentation and we'll have questions at the end, but he's also said if you want to interject as he goes through his presentation, you're happy to just interject and ask a question. So you can unmute, come on camera, that kind of thing. Feel free, or you can post your questions in the chat as well. So I will hand over to Daniel now. I'll be sharing his slides. So I can get those up just now as well. And just, yeah, cool. Daniel, just give me a holler when you want to go to the next slide. Just give me a second.
Will do. And I guess I'll start off with an apology, but I'm stuck in Manchester. So I'm currently sat in a hotel foyer because I couldn't get a train back up to Edinburgh. But so if the sound's not right, please let me know. And at some point, no doubt, meeting rooms behind me will clear out and there'll be lots of background noise. So apologies for that. I guess as way as introduction, I'm actually relatively new to Charity Bank, but I have been in the social investment sector for an awful long time. I used to be deputy chief exec of something called Biggish Invest, which has been relatively active in Scotland. And one of the reasons why I joined Charity Bank was to kind of help them develop new products, new ideas, and also kind of access markets that they haven't been that successful at accessing before. I mean, the bank it's a bank and it's been growing very, very quickly. But most of that growth is in England. And so, we don't have the footprint that we should have across the Celtic nations, actually, Scotland, Ireland, Northern Ireland, or Wales. And I think there's a recognition we'd like to do more about that. My own specialism tends to be what the bank would call smaller loans and unsecured loans. So I guess that's probably why I'm kind of talking in the Scottish arena, because loans tend to be slightly smaller. It's, if you can contrast with someone buying, a charity buying a building in London, it's tens of millions of pounds, whereas to buy a building as a headquarters in Kirkcaldy doesn't cost anything like that. So it tends to fall under my remit. And I said my role is I'm head of all the lending under £500,000, and I'm also kind of involved in the erratics. So anything that's like product development, rolling out grant programs, support programs, that sort of stuff. But it's all relatively new to me. So the caveat to this presentation is I might misrepresent the bank, in which case I apologise. But also I'm really interested in understanding, at some point in the presentation, your sense of what the market needs, if we've been doing a good job, and how we can do better as well. But Duncan, can you move on to the next slide? I'll just give you a little bit of background about the bank. So I guess unusually in the social investment sector, we're a bank, and that really has a couple of positives, which is that we have the capacity to raise deposits. So we offer savings accounts to charities, social enterprises, and individuals who put their money with us, typically for a year, and they get a small interest rate back. But the real positive is that they know that the money is being used to support charities and social enterprises elsewhere. And so that provides a good home for charities to put their savings in. It's all covered by the government Bank of England guarantee, so it's a safe place to put it. But then people also know that their money isn't being invested in oil, gas, slavery, nasty things, but actually very directly in small charities and social enterprises doing positive things. That stat there says that we've made 1,100 loans over 400 million since inception. That's true, but actually an awful lot of that has come in the last 24 months. So 4 years ago, the bank had a portfolio of about 50 million, which is a lot of money, but it's now sitting at about 300 million, which is an awful lot of money. And our sense is that we're kind of picking up business because mainstream funders are not that interested in funding small charities. And by small charities, I mean people with turnover under £1 million. And so people who used to borrow money from Barclays or Lloyds, or actually in some cases Triodos, are finding it difficult to raise money from those people and are coming to us. And certainly we're very interested in taking that business. The other interesting thing about the bank is we used to be a charity. So we were founded as a charity ourselves, and all the profits, all the interest that get paid would be recycled back in. There was two flaws with that. One is that we lost money hand over fist for years because we did an awful lot of risky business, and the last 4 to 5 years has seen ourselves kind of reposition ourselves, and I'm focused mainly on property. So we're a senior lender, a secured lender, and that means that we are now in a much better place than we were 4 or 5 years ago, and that's why we're starting to think about, doing slightly different things. But the Bank of England also didn't like the fact that we were a charity for some reason, so they asked us to deregister as one. However, we're 100% owned. All our shareholders are either charities or social purpose investors. And Duncan, if you move to the next page. Thank you. That's our shareholders. So we were set up 20 years ago, mainly with money from people like Esme Fairburn, who you may have heard of. And there's some names on there that you probably recognise. Not all of them are charities. Big Sighted Capital has put an awful lot of money in recently. They're kind of a quasi-government organisation, but we've got a mixture of foundations, housing associations, charities, etc., etc. So it's one of the things that makes us different, that when we eventually do start paying dividends, making a profit, it will all go to foundations and charities in the sector. And actually what we hope is that many of these organisations won't take the dividend, but allow us to recycle that money back in as grant to support the social sector. So it's one of the distinctions, that when people pay us interest, it's primarily going to good use, and hopefully it'll actually start to be put to really good use in terms of grants, etc. Duncan, next slide, please. Thanks, Duncan. It's a little bit covered off my screen, but we have regional managers across the UK. And if you look at those stats, you'll see, I guess, one of the reasons why I was kind of keen to talk to you guys is that, we've done 106 million of lending in the southeast of England and only 18 million in Scotland. It's actually even less in Wales and Northern Ireland. And that's a shocking state of affairs. Now, I think part of that is, if you looked at the average loan size, they'll be smaller in Scotland than they are in London. But actually, a large part of it is just that we've not made enough of an effort as a bank to reach the markets in Scotland, Wales and Northern Ireland. And we need to do more than that. And my sense is that there are organisations that need to borrow money. And it's just that we've not had a relationship manager, pounding the pavement, going out to see people, trying to build relationships in the way that we should do. So we'd like to change that. So in one sense, it's a bit of an apology that, we've invested in some really good organisations in Scotland, but not enough. And that's our fault. We haven't made enough of an effort. And we've just hired a guy in Scotland who's going to be working with us for a couple of days a week. And if the business is there, we would try and expand that. And there's a number of programs which we are launching in England as pilots that, once they work, we will roll out in Scotland once we've established they work. So, as I said, currently the majority of the work of the loans that we make are secured against property, which is quite a limited market. Our feeling is that to grow beyond that, we need to have a presence, which we're kind of sorting out. And then secondly, to offer different types of product, unsecured, blended finance with a mixture of loan and grant, that sort of thing. But we're at kind of a relatively early stage of that thinking. And it's just worth saying that we recognise we haven't done enough and that we want to do more. Duncan, could you move us on? Okay. So this gives you an idea of the types of organisations that we lend to. I mean, it's any charity or social enterprise. So unlike many other social investors, we don't have themes. So it's not like this year we're doing arts, next year we're doing community. It's market driven. So when we get applications, if it's a good organisation with a good social purpose, with the right legal structure and a good plan, we will invest. And that, interestingly enough, it also includes these churches, which many social sector banks won't do. But we see churches as often cornerstone organisations of small communities. So we're more than happy to invest in churches so long as they are charities. But the majority of what we do, if you look, excuse me, if you look at the numbers, is social housing and social care, and that tends to be because they require larger amounts of capital. But having said that, we do such a wide range of organisations, and again, we're not thematically based. It's anyone that's got a good idea that's charitable based or social sector organisation that can demonstrate they can repay us the money. We'll be keen to lend them the money. Duncan, can you move us on a little bit? Okay, so what makes Charity Bank different? There's all the things on the right-hand side, which are true. I think that also probably applies to some of our competitors in the space as well. You know, there are good social investors that are not Charity Bank, like Triodos or Big Issue Invest, and I suspect that they could all offer much of the same thing as we can. I suppose the things that are slightly different is we're quite old-fashioned, and I mean that in a nice way. When people call up, they actually speak to somebody. What that means is that we're able to, you know, it's quite nice not to be driven onto the internet to do an application, and that I think suits charities and their projects better than not, because quite often those projects are somewhat complicated despite the size, and actually they require a little bit of thinking about how best to structure them. And I think, you know, I think all banks would say, or all social investors would say that they do a personal part, but it really is true that, you know, if you apply for money, you will actually have somebody call you back within 24 hours and we'll talk it through. And, you know, we can't always help. And quite often, in a lot of the deals that I've looked at with the Charity Bank, you know, it's been 6-7 months before we've actually got to a point where we could lend the money. But that conversation is quite an important part, I think, about what makes us different. And then the second thing is that makes us different is that we're growing, and we're very keen to grow. So it means we're actively seeking new opportunities to lend people money, and it's not a computer says no kind of situation. We're kind of actively trying to find reasons to say yes rather than say no. Yeah, okay. Duncan, next slide, please. Okay, so the types of things that we typically are lending people at the moment is I mean, the majority of it is to help people buy their headquarters or buy a building, or for social housing providers to buy affordable homes. So I'd say that's probably about 75% of what we do. But we do a whole bunch of other things as well, including, you know, bridging grants, small amount of providing working capital to help people to grow, which we don't do very much of at the moment, but I'd hope that we'd end up doing more of that going forward. Invest in new products, new income streams. And quite often it's, you know, we're doing contract funding as well. So it really is a wide range of things, although I would stress at this point in time, we're mainly a secured lender. So it's mainly to help people buy property. That will hopefully change over time, but we're not quite there just yet. Next slide, Duncan. Yeah, I think I'll probably go to the next slide as well, actually. Cool, okay. So the important bit, I suppose, is our loan terms. So we'll do anything from 50 grand up to 10 million pounds. My suspicion is that, and I know this for the majority of applications I've looked at in Scotland, it tends to be towards a lower amount. And I would also say, although we've got a lower amount of 50,000, we have done loans of as little as £25,000, where the social impact is really high. So that's just a broad parameter. You know, we won't go above 10 million, and typically, although it says 50,000 there, 25,000 to 30,000 pounds is the lower amount. In terms of the loan structures, it's anything up to 25 years, but I've got loans in the book which are 6 months, so it's anything from 6 months to 25 years, and we try to be as flexible as we can. And I think that's what I was saying when people call up and tell us what they need, we try to structure the loans around that. We do provide development finance, and by that I mean people building property. So there's a really nice project called Common Ground for Against Homelessness, which is run by a charity called Rowan Alba in Edinburgh. They've bought a property out in Bethnal, and It's a funny old building, but they're converting it into 14 units of housing for homeless people, and they're borrowing 500,000 from us to redevelop it. And that's a brilliant project. These are people who typically find it very, very difficult to find housing anywhere else. They are, and Rowan Albon have got a really nice ethos in the way they go about doing it. And I think we were they went to 3 or 4 different providers to try and get that money, and they all said no, and we said yes. And that's partly because they're an excellent organisation and it's an excellent project, but also because we were open for business and we could talk through them, why it all made sense both financially and socially. Interest rates tend to vary, so if it's a lot more expensive, the less you borrow, so cheaper if you borrow more. I think at the moment, if you're borrowing 50,000, it would be base plus 3.6%. But if you were borrowing a lot of money, anything over £1 million, it's probably around base plus 2%, a little bit more than that. But that varies over time. And if you're a housing association, we can go even cheaper than that. Quite a lot of our pricing is just dependent on where we can get money and the money markets, which seem to be moving around at the moment. But I would say that anyone borrowing money really should be speaking to us, Triodos, CAF Bank, and Big Issue Investi, for example, or Social Enterprise Scotland, obviously, and doing a little bit of kind of shopping around for what's the best rates. And you'll probably find that we're all round about the same. So the senior lenders, Triodos, us, CAF Bank, will be kind of pitched about the same rate, but at certain points one of us is cheaper than the other, just because of where we're getting the money from. And any responsible person borrowing money would sense check that the rates, and it's almost as if I think sometimes the rates, people like a headline rate, but the differences are so small that it's actually worthwhile understanding the relationship that you're going to have with somebody, because not everybody gets on with everybody, and some people, there's some projects that I've been to see that I've just loved straight away, and I knew I wanted us to do it, and I've pushed forward. And then there's others, if I'm being frank, that I've been less excited about, and that is reflected sometimes in the level of how quickly things take to get through, and also it has to go to a credit committee, and I have to kind of like sell it to people. So you'll find it. That's a long-winded way of saying that in the kind of social investment world, it isn't just all about pricing; it's also about relationships and trust as well. And it is worth shopping around. We do a very good job, but there are also other excellent providers out there as well. And then the last thing to say about the terms as well is that we're entirely flexible. So it's not our job to punish charities and social enterprises that are doing well. So if you take a loan out with us, and then suddenly you get a legacy, or someone donates a large amount of money and it makes more sense to repay the loan rather than paying interest, there's no penalty to pay us back. So it's pretty flexible that way. Good. Duncan, next slide, please. So probably worth just quickly going through what it is that a borrower will look for. I mean, there's a list of things there which all make absolute sense. But the things that really should stand out is, can you demonstrate you can repay the loan is one. And two, are you going to use the funds for good purpose? Is it a good project? Most people are pretty sensible, and when they apply for money, they ask for good reason. But occasionally we do come across people asking for money and less good reasons. And sometimes that might be, I had one, funnily enough, in Manchester, where someone had bid, probably about 50-60% above the asking price for a property, which was worth probably 50 or 60% under the asking price. So it's kind of, yeah, I could see Kim pulling a face there, but you're right. I mean, it's just one of those things that, we will sense check it. And actually that's probably part of the value add, that, someone like me will do our due diligence, and it should give some comfort, although we're not advisors, that the project actually stacks up, that it makes sense, that you're not doing anything silly. Obviously it's the trustees that have that responsibility, but lending money it's pretty sensible stuff, that demonstrate you can repay the loan, demonstrate that you've got good governance in place, demonstrate that the project makes sense, and that there's a market there, And you know, if they're taking security and offering a cheap rate, that the property can be sold. And some of the things that catch people out, I suppose, is that, this is particularly true of community assets and faith-based assets, is that they get offered a bit of land that's got and it's worth money to them, but it's got a funny restriction on title. You know, so certain buildings can only be used for faith-based stuff. Certain stuff can only be used for sports. Certain things, as a really interesting one that was former coal board bit of land where you know, it was a long list of 12 things that it could be used for, which pretty much meant that the land could never be sold on, and the only organisation that could use the land was the organisation that was currently using it. So it kind of it was a risk for us and for them to think about, and I think that isn't, you know, what's on this list isn't just what Charity Bank would look for, it's what any good funder would want to look for as well. Duncan, next slide, please. Yeah, so questions to ask us, I'm sure I come across as very reasonable, I'm sure, but you do need to be careful when talking to a lender, and some of the things you probably should think about before borrowing is the interest rate. At this time, it's actually very difficult to get a fixed rate because interest rates are going up, inflation is going up. I didn't quite realise it until I joined the bank, but we actually have to go to the money markets to secure fixed rate funding, and at the moment we just can't do that. So if I'm quoting a figure of, you know, base plus 3%, which is effectively 4.25%, if the interest rates go up, you know, by 2 or 3%, you know, that's could have a significant impact on the loan repayments. And so, you know, it's worth checking with people how long the rate that's being quoted lasts, whether it's fixed or variable, and doing your own calculations to work out whether, if it goes up, can we still afford the loan repayments. And with that in mind, you probably want to worth asking the bank or the institution what happens if you can't pay, because different organisations will have different approaches. What I can say is that, you know, if you go into default with one of the high street banks, they'll treat you pretty roughly, and work on extra charges. Charity Bank, in its 25 years of existence, has never called time on a single charity. So we've definitely had loans that have gone into default, particularly had a lot of experience that over COVID. And I think we clearly want and need people to pay us back, but we're quite a gentle, responsible lender who takes the time to understand why people can't pay us back, and hopefully try and help work through to let organisations get back into a position where they can repay us. But we're not going to slap on horrible fees, or, as I said, you know, take charities into unfortunate proceedings, which does happen with some lenders. Second thing is that fees, people fixate a little bit on interest rate, but actually there's lots of other fees that are associated with loans, which include arrangement fee, which tends to be a percentage that you pay up front. There's also something called commitment fees, which is like a non-utilisation fee. So if you agree to borrow money and then you know, you don't draw it down for 2 years because the planning is delayed, quite often banks will charge you a non-utilisation fee for that. And then if it's a development project or a property project, there's also can be quite substantive legal fees in terms of, you know, checking out the report and title that the title of the property is good and clean, and security has to be put in place. And then the last one is about covenants. So unless you've borrowed money before, you might not know, but quite often a loan agreement on page 72 or like 95, hidden away somewhere, will have requirements to meet certain covenants around debt service or cash balances, etc. And it's very definitely worthwhile asking, you know, making sure that the borrower makes that clear to you. Okay, next slide, Duncan. Okay, what else should you look for from your lender? It sounds like a little bit. These slides have been set up to almost like suggest you should go around the market and not come to Charity Bank. Actually, you should do that, and you should definitely come to Charity Bank as well. So you should expect from your lender an organisation that understands charities and social sector organisations. Had a call this morning with someone who went with an unnamed mainstream bank. who got them to go spend money on a valuation report, 2.5 grand. And then once that came in, then decided that they didn't want to lend to charities. So, there's something happening in the market with mainstream funders that's making them withdraw from lending to the social sector. I think it is wise to, if you're looking to borrow money, make sure that you're speaking to somebody who does lend to charities and social enterprises like we do. I also think, and this is just a personal thing, when I spend my money or use customer services, I think about ethics and values. I don't like the idea of it's the good circular economy. And I said we don't. Our bank is not exclusive in this. There are plenty of other institutions which do good stuff, and I could name them outright. I'm sure you could as well. But I think it's a good thing for the sector to spend the money within the sector, and also, to try and keep your funding aligned with your own values. There's a very interesting conversation going on with some of the, funny enough, people like Esme Fairbairn. I've just started to think about where their money is invested. They've got a huge endowment, and historically that was invested in the stock market, and that meant that their money was invested in all sorts of organisations that you wouldn't necessarily put on a green list. And they've started to think a little bit about where and how they invest their money, and I think that's a good thing for the sector. The top one, a fast and efficient process. Again, I'll be honest. That's an aspiration for us. We're a work in progress as the bank. I think we do a good service, but I think we can do better. And at the moment, I would say in terms of timeframes, if you make an application, you can get a credit approval within 2 weeks, which is pretty good. But disbursement takes a lot longer. And I've got a couple of loans which, applications come in and the money's been dispersed within 4 weeks. But I've also got a couple where there's been issues with the title, and it's been like 6, 7, 8, 9 months. And that's not good enough on our behalf. And I think that's true of all banks actually. But I think because we're a small bank and we're growing, we're trying to improve our processes as much as we can do. So it's worth asking when you're applying for money how long things will take, not just to get approval, but to get the money in the door as well. Duncan, next slide. Okay, so I've talked mainly about loans. So the bank will do 2 things, only 2 services. So I should have said it at the start, we don't offer current accounts. So we're not a transactional bank. We're not big enough, and we probably wouldn't be very good at it. What we are good at is taking savings and lending it out to people who are doing good stuff with it. So that's the key message, I suppose, that if you're a charity or social enterprise that's got money idling around, that's not doing anything, not earning you any interest, or is sitting in a bank account that's not doing much good, put it with us and we'll get it to work. And then the second part is we put it to work by lending money to charities and social enterprises. So it's and the vast majority of them are working in the UK as well. Okay, next slide, Duncan. Oh yeah, okay. And next slide after that. Yeah. So this is a quote from Pathfinder Dogs. Pathfinder Dogs. I don't know if you guys know Anne Royal, but she's a blind lady who, but a very, very interesting lady actually. So she was born blind and then had an operation meant that she could see again, and then unfortunately for her went blind again in her teenage years. But she's a real force of nature, an extraordinary lady. But it's a good example of the different types of, like 3 or 4 years ago, the majority of our loans were like, big loans, over £500,000. Pathfinder Dogs had probably turnover about £50,000-60,000, all donations, based in Hamilton. She trains up Alsatians as guide dogs, and it provides, a lot of independence to. It's a really nice little organisation, and it's a different way of giving people access to guide dogs, a lot of training, a lot of kind of it's a very inclusive way that they do it, and it's very kind of small scale. And part of what they do is they when you're nominated or allocated dog, you have to come up and get trained in your dog so that you can use it correctly, and you need somewhere to stay for 3 weeks. So wanted to buy a property, a house in Hamilton, and we lent our £80,000 to do that. So, very clearly, if you looked at their P&L or the balance sheet, they had no assets, small amount of income, and because they're a charity, they don't make surplus. So there was no way they were going to, be lent money by a high street bank. But as I said, the social impact is off the scale, and they very definitely can pay us back. It's just that they couldn't demonstrate that from a historic track record. But because when they applied, they spoke to me directly. I was able to give them the time to kind of establish and essentially give them a fair shot at putting their case forward for why we should lend them the money. And I'm pretty sure they've paid back most of that loan early as well. So they've not only demonstrated their case, but they're doing really, really well. And hopefully they're going to do some more stuff as well. They've got this really good plan, or great plan, of actually building a little estate of houses which are specifically designed for blind people. So no curbstones, no bins outside to trip people up, that sort of thing. And I think they're just great. But they're very clear the type of organisation that other funders would have just said no. So it's just a good example of our approach. Okay, I think that's probably it for me. I've gabbled on quite a bit. So has anyone got any questions for me?
Thanks,
Margaret.
That's great. Margaret, go for it.
Thank you. My favourite subject, that whole property acquisition and loans and grants and pulling together the right kind of package for the right kind of organisation. And in my experience, Daniel, one of the things that sets off our anxiety, whether as a small charity, a community organisation looking to acquire an asset, or I've worked with housing associations looking to pull together significant packages of money to acquire a lot of property, that issue of determining internally what our acceptable level of affordability, where that sits, and what we will need to prove to the lender for their affordability criteria always looms large as a complicated issue. So, I mean, I'd really value hearing from you on what you look for and what you look at, and any hints and tips for us.
Sure. I mean, first and foremost, you're right. Actually, it's your tolerance to risk rather than ours, which is the most important. I mean, the bank in a way can be somewhat formulaic. If it's large amounts of money, it's a loan to value type calculation. And then I guess the affordability, if you're basing it on historic track records, and those, that track record is well established, then you can go relatively low. I mean, I think for some organisations we would look at, debt service ratio, and by that I mean, the surplus at the end of the year that can be allocated to pay down a loan of something close to 1.1 or 1.2. So that means that if your loan payment is £100, that you're generating something like £110, £120. But that really depends on the nature of the income. So if it's affordable housing, for example, and you're getting rental income in, that's you can be pretty confident that those funding, that money will keep on coming in. If it's something a little bit more pacey, like a new community centre that's got a community cafe, then I think you should, those ratios will shift entirely. I can't give much more than that, Margaret. I mean, what I would say is that the beauty of the bank is we look at everything on an individual case by case basis, and each case is slightly different. I'm afraid that I can't be any more helpful.
Yeah, no, that's great. That is really helpful. And is that something that you would work with an individual applicant or potential applicant to help them look at what affordability means in practice for them?
Definitely. And I think because we're quite gentle in many ways, there's quite often when people are quite sensible, you start off on a process of applying for money, and sometimes the questions that we ask and make people rethink a little bit. And quite often the application that comes in is not what's then approved kind of further down the line. So it's a bit, and I would also say that, you know, it's not like we are, you know, we are experts at lending money, but we're constantly learning. So it's not every project looks the same as the last one. And, you know, geez, the world looks very different now than it did 2.5 years ago. So some of that institutional knowledge, frankly, is out of date. And, you know, part of our role, you know, my role is meeting with good applicants, understanding what it is they're doing. We come to a common understanding of what we think is reasonable, and I have to sell it internally to our credit team, who tend to be, you know, haven't seen the light of day for the last 10 years and have very fixed views, but are willing to be persuaded. But yes, no, we would try and work through with people what they can afford and can't afford.
Brilliant, thank you.
So we've still got a couple of minutes left for questions. So Laura, do you want to go ahead with the question?
Hi there, thanks for a good presentation. That's really helpful for people that are looking for capital funding up here. We've got a lot of groups like that. But in that same vein, many of the groups that are looking for funding are asset locked. You know, there'll be small, you know, community halls. So am I right in saying that they're excluded because their purpose is within the constitution? So if that group then disband, then that goes back to the community. It could never be sold by the bank.
Yeah, I mean, can make it difficult. I mean, sometimes, so the quick answer is no, they wouldn't be necessarily excluded. It makes it more difficult, definitely. And sometimes you'd find that, I mean, I'm guessing, are you the lady from the Outer Hebrides? Yeah, okay. So, I mean, you know, if a community group in Glasgow kind of decides to call it a day, there might well be another community group that's willing to step up and take it over, and that can be quite easy. But just thinking it through, I guess if it doesn't work for one community group in Harris, there might not be another one to step up. So I don't know. The quick answer is then no, it doesn't exclude entirely, but it does make it slightly harder. And I guess that's why we should have kind of conversations. But we do lend to asset locked organisations all the time, and as I say, quite often there are covenants in place. It would be better for us if we could have a secondary, we could sell the property on, but if not ideal, but never say never.
Does anybody else have any final questions, Paul, or anybody else? If you want to make any final comments at all?
Yeah, not really a question, but just to say it's been really, really useful to just kind of get a snapshot of what the charity bank does. And I guess as a policy and public affairs person, most of my focus is on government funding. But I know that our information team and our funding teams will be really interested in hearing more, so I'll send on the notes. And just that, yeah, absolute organisations that we're hearing from are really struggling with high street banks. On a whole range of things, but particularly actually the current account issues and issues around the kind of how charities need to access their money and, you know, dual signatories and stuff. But it's been helpful to kind of get a sense of what else is out there in terms of options for organisations, and perhaps Third Force News as well. Our sector magazine would be quite interested in running a piece on the charity bank in Scotland.
Great, thanks for that. I guess, Paul, maybe if I just to interrupt, just to kind of throw it back at you a little bit, and perhaps anyone else that wants on the call. So my assumption's always been that it's good to talk and it's good to have that kind of relationship and trust, and I think that's right for some organisations. But I'm kind of recognising a little bit that if the mainstream banks are moving out of the sector, that maybe we should we be focusing a little bit on being more efficient, stack them high, kind of get money out the door quickly, but focusing on, you know, is there a gap in the market there, do you think, for how can we serve Scotland better is the short answer question, I think.
Yeah, no, I don't have an answer
Okay.
for that right now, but it's food for thought, and I will go back and speak to colleagues about that.
Okay.
Yeah, I think there is a really strong awareness of charity bank, I think, within the social enterprise community, within the wider third sector in Scotland. I think there definitely is that, but it was, I think, interesting today just to see a bit more detail, a bit more depth about what you guys do, what you can do, what you want to do more of. I think that's really, really important. So I think, yeah, certainly a role for social enterprise Scotland and you as well to really just help make those connections. I think as well to help you guys make connections and just really raise the profile of charity bank in Scotland. I think that's.
I think so, Duncan. And I think, I mean, I think, as you can tell, we're not a fully formed beast by any stretch of the imagination. We're a work in progress, like any organisation. And what's important for me is a statement of intent that, right from the very top at board level, right down to the bottom, i.e. me, there's a real intention to do more in Scotland. And I think, how we go about that will change over time. But it's really important that we recognise that we haven't done enough, and that we think, well, there's great charities and social enterprises doing good stuff in Scotland, and we want to be part of that. So, and we should be more of that. So that's it.
Good to know. Yeah, as I said before, we're happy to make those connections. We're happy to kind of obviously keep up the conversation with you guys about, how you can kind of increase your impact. Definitely, certainly. So
great.
So we're at time just now. So that's really, really useful, Danny. I really, really appreciate that. As I said, we'll keep in contact and continue the conversation. But if anybody's got any follow-up questions after the webinar, please feel free to email me, and I can pass them on to Danny. And I'll pass you on his contact details as well, which is kindly provided on the slides. And these sessions are all recorded as well, so you can catch up on Vimeo, on our Vimeo channel after as well in a couple of days. So thanks very much, Danny. Thanks everybody for coming along today. Really, really appreciate that. And I hope, Danny, you managed to get back to Scotland at some point soon.
I do too. Great.
Thanks, everybody. Have a good day.
Thanks, Doug. Bye-bye.